think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. I'm here with Paddy of Orogen Royalties. So I had Rick on my show about 6 months ago. No, it's actually longer than that. It was about the fall time last year. And Rick does a lot of grading of stocks. So people submit their portfolios to Rick. You all know this. He always promotes that. Mm-hmm. We asked him what was one of the best companies that he saw that he's been looking at.
Right.
And he said that I don't know if he had you at a 2 or 3. He has a really very strict rating process, yes, right? No one hardly ever gets the 1, but he had you at like a 2 or 3. Yeah. And he said Orogen Royalties. So back then, the share price was about 45 cents, 50 cents. Then now it traded up over $1. Now it's at 81 cents. So we saw a big move in it. So what about the company? What about the move in the share price? What do you think was the value proposition that people saw and they wanted to tap into?
Yeah, that's a good question. I think the big catalyst is our Silicon royalty asset, which is in Nevada. It's a 1% net smelter return royalty. It's on a project called the Expanded Silicon Project. It's the project operators, AngloGold Ashanti. They're one of the larger gold producers in the world. And so it was a project that Orogen had developed back in 2014. And we optioned the project or joint ventured it with AngloGold in 2017. And so since then, they've drilled approximately 300,000 meters into the project. And so it's come a long way. And as time has gone on, it's grown from a 3.2 million ounce resource. Then last year, it came out to a 4.2 million ounce resource. And then there was a satellite deposit, if you will, nearby. And that's one of the big catalysts that actually has driven it up to the price that it's at now over the past sort of 6 to 8 months, which is a 9.1 million ounce resource in what's called the Merlin deposit. And so these deposits are within our royalty AOI. They're oxide gold, which lends itself to a cheaper form of, or a lower form of operational costs. AngloGold Ashanti continues to this day to continue to explore the project. Last year, they drilled about 100,000 meters. They spent about $75 million US on the project. Mm-hmm. We expect to see a similar sized program that's going on this year. And so we expect to see more information come off the project. The deposits in various capacities are open, whether it's along to the west, at depth, in between each the deposits. And so we're expecting more news as time goes on. So a very exciting time for the company.
Yeah, sounds like it. And you have multiple other projects as well. So obviously that Silicon project was what boosted significant, right?
Correct.
Then you have other projects. So how are the other projects looking for the company as well?
Yeah, so beyond the Expanded Silicon royalty asset, we have what's called the Ermitaño royalty asset. This is another project that we generated. The roots of the company are based in prospect generation. So we identify early stage targets. We move those targets into partners' hands and they take it the rest of the way. And Ermitaño is one of those projects, and it became a discovery in 2016. It was fast-tracked to production into 2021. So it's been cash flowing for the company since 2021. It's meant we've been profitable since 2021. So we don't go back to the market to raise money anymore. We've been profitable now for 3 years. Treasury's $21 million in the bank. So that royalty asset provides a tremendous amount of stability. It's not the size that Silicon is, but it provides a base level stability, which has really put the company on solid footing. And then in behind that, we have our prospect generation business, and that's the early stage pipeline of exploration opportunities. We are boots on the ground type group. We have a lot of geologists in the company, and they're a tremendous group. They spend a lot of time in Nevada, British Columbia. We're always trying to identify early stage exploration targets. And so based on the projects that we've generated in the past while, we have 8 active joint ventures, and we partner with groups that are private, small public groups, and we go all the way up to the major producers. So we have partners like Nevada Gold Mines, groups like I-80 Gold working on some of our projects. So that in of itself is a really interesting part of the business, because those are the ones that can become the next value creation event for us. It's hard to predict always what the next big project is going to be, but any one of those, when it becomes a discovery, can join alongside Ermitaño and Silicon quite well. And so that's always the other exciting part of our business. So there's sort of early stage, you've got a royalty portfolio, and then you've got your two flagship assets within the company as well. So that's kind of how it's all structured.
Yeah, that's amazing. So you mentioned that the company's been profitable for about 3 years now.
Yep.
21 million in the bank. A lot of shareholders love to hear that, because they're like, hey, we don't want to get diluted and everything.
Correct.
Right?
Yeah, that's important.
What does cash allocation look like for the company right now? Are you looking at acquisitions, or are you looking at more of the share buybacks or anything of that nature? What's that kind of look like right now?
We don't do the share buybacks yet. That's something that we've thought about, but we haven't quite acted on that yet. Where the capital deployment, if you will, is coming for the next while, is to continue to focus on identifying early stage projects. We have annual budgets that we will go out and look at ideas and opportunities, and so staking costs, exploration related costs go into that. We are looking at royalty or project acquisitions. That's a little bit more of an expensive endeavor. We are not the type of royalty company that's going to be competing with the other groups in the bidding processes that we've seen over the past few years in the royalty space. Our cost of capital, we feel, is too high, so we've not taken on any debt to go after projects like some of the other groups have. We would rather find earlier stage exploration opportunities that we have. Like I said, we have this great geological team. They can identify high quality targets even at an early stage with a decent probability that they may get to become an economic ore deposit one day. And so that's where that capital allocation comes in. And we don't always know exactly what the amounts are. And the biggest one we've done over the past year was a $1.75 million royalty acquisition of a really interesting royalty in Colombia called Larica. Early stage, it's a little tough to value right now because not a lot known, but if a drill hole's put in there and it does equate to a discovery, and then boom, that's when your value comes in, right? So that again, that's how that's where we're thinking over the next year.
That's good. So with royalty and streaming companies, obviously it reduces the risk. So you all go out and value like kind of the assets that you're getting involved in. Like you said, you have geologists that go and study the space, and this is like important for even my audience, because we look at miners, we look at these different companies, but when you're looking at miners, oftentimes like there's risk involved in it.
Correct.
And so you all focus on mitigating the risk and doing the research for the investors. And so
that's a good way to put it. I think throughout the entire aspect of our business, we deploy some form of risk mitigation. Prospect generation in of itself is a form of risk mitigation, because we take a project to a certain stage. We're not the type of company to start to drill every project. In fact, we don't drill projects. We get them to the drill targeting stage, and we let another group come in and take that higher risk effort in trying to find an exploration discovery. So we don't focus on single projects. We focus on a variety of projects. So increasing the probability that one of those projects, it's kind of like buying a lottery ticket, that you're going to have an exploration discovery in that way. So that in itself is risk mitigation. Yeah, and on the royalty side, obviously, with having royalties as opposed to operations, you're not involved in the capital expenditure of building a mine. You're not involved with the ongoing sustaining capital of keeping a mine in operation. We're more of a passive income type of approach, where we receive funds in on a quarterly basis, and we have no capital outlay with regards to those operating mines.
Gotcha. That makes total sense. So where can the audience find more about the company? I appreciate you for coming on the show.
No, thanks for having me.
Where can they find more about the company, find out more, and such?
Yeah, they can come to www.orogenroyalties.com. You can come and send me a note anytime, Paddy@orogenroyalties.com. I'm always happy to entertain questions from investors and shareholders.
That's good. Appreciate you for coming on.
Yeah, thanks for having me.
Yes,
Cheers.